Morning, everyone. Just a quick summary of, in particular, the lithium market, and just like to also take care of your health. Many of you with investments, you see these fluctuations going up and down, and it can take its toll if you are too impacted or heavy in, etc. So do take care of your health. Um, Let's start today with what happened last week in some of the major lithium players. As you can see, it's been a tough week, and this is even tougher when you see the kind of S&P 500 making records. You see the big returns on the big tech stocks and etc. The trend seems to be going one way. You hear about interest rates not coming down as quickly as was expected, and all of this news kind of can impact you. But what I like to do is quickly move into some charts today, and um, also it's good to re-look at why you invested in the first place, what are the fundamentals, and should these short-term or medium-term moves be impacting your overall investment strategy. So as you can see, it's been a bad week for these stocks. Let's look a little bit closer at China. Pulled off one of these charts for a colleague. You can also see that there as well, with respect to lithium, downward trend. Look at the chart. It's you can see the stages of going down, and the price of lithium carbonate. I mean, it swung and went up by 80%, and that was seen as crazy, and now it's gone the other way by a similar amount, and one can also see that as crazy. So there is immense volatility at the moment, but we need to continue to focus on the fundamentals. Let's take this particular chart of Tianqi Lithium. What's drawn into this chart is a potential sign of a bottoming. So we could be drawing as straws here, but again, today we're just looking at these charts. I generally do not invest based upon charts. However, I listen to those who do invest and trade on charts and can see certain trends, and that's all I look at them for. So many analysts and charters and investors traders now see a bottoming, a pattern in the chart, as you can see that I've flashed up on the screen. Some harder data with respect to inventories. So this is one of the ones that's a bit more easily understandable. Inventories of LCE, etc., are beginning to reduce. So that's a good sign, at least for stable kind of prices going forwards. And then on this curve, you can see that the cost of batteries is also reducing, cost of production per kilowatt hour, etc. So that in itself, again, is a really good thing. That's what we want in our industry. More mass production, lower costs, eventually more stability. And these are all signs of bottoming of the curve in terms of prices, and which is fed through to share prices. And I think what we need to focus on now really is the demand side. So that's where the uncertainty lies. That's where all the analysts are arguing in the press. Every day you hear about weaker than expected EV demand in China, or weaker than expected EV demand in US, or Tesla's having issues, or Hertz is selling X% of its fleet, and you hear all this noise, and that gets reflected in short-term volatility and gyrations in the curves. But I would say keep a cool head. Do not invest more than you can lose. Be around colleagues who are level-headed, have those discussions, and very importantly, go back to your original investment thesis to see why you invested in lithium, why you invested in or other materials, why you invested in specific companies, and what time frame you were considering. I think that helps me out. So with that, delve into some of these issues, have the discussions, and hopefully we see a turnaround in the lithium market, which in part is driven by EVs, um, and other, not just EVs but other appliances. I mean, you know, we haven't even gone into robotics, etc. One last thing I'll say, one leading indicator, not really directly related, but just a leading indicator, is that all the chip companies now are projecting an upturn this year in chip demand, which again indicates to me um, demand for high-tech products, also includes EVs, robotics, IT, phones, all of that. But it also demonstrates a balancing in inventories, and I think that's the key story. And rebalancing in inventories, stabilized inflation, eventually a lower moving forward curve for interest rates, and importantly, companies ticking off their milestones. That's fundamental. If we have all that, then it's patience, patience, patience. I hope that helps. Um, and I'll try not to look at the Mag 7 and big tech and S&P 500 too much, because yeah, you do wonder, right? And I think that's many investors, both private and institutional, may have, now we're in the capitulation phase, may have capitulated, which puts further downward pressure on the kind of stocks that we invest in. Let's see how we go. All right. Have a great day. I hope you enjoyed this one. Cheers.